Hi, I'm Todd Jordan. Welcome back to our beautiful studios here in snowy Stamford, Connecticut. We've got Brian McGough, who runs our retail sector coverage, so we're just going to jump right into it. Welcome, Brian.
Todd, thanks.
We had some retail sales today.
Yeah, we did.
That got us talking around the office about JC Penney.
Yeah, sure. So the overall numbers that we got out are the ICSC numbers, and they come out every Tuesday. It's a representative sample of about 80 retailers over the course of the country. And why I like it is because it's actually fairly dispersed over the course of all the states. So I can look at a company like JC Penney that matches the stores up pretty closely to where these retailers are based, and I can get a reasonable feel as to how things are going. It's not perfect, but it's a good directional indicator.
Okay, so you've been a big bear on JC Penney up until recently. You've pivoted, you're now a bull going against the tide. Everybody hates the stock. What's the thesis on your bull rating? Well,
point one, it's not going bankrupt. Point two, it has about $1.30 in earnings power. Why? Because out of all the problems now inside this company, there are none that cannot be fixed. And that is, I think, a big point that people are really, really hesitant to grasp. So ultimately, I think we'll see those changes take place over the course of 12 to 18 months. And we're going to, see a path up to earnings power of about $1.30. And if you look way out to 2017, I think it is, you've got our numbers, which are about $1.20 above the consensus.
Got it. Okay, so what are some of the initiatives, or at least one initiative, where you think they can help turn the corner here?
Well, one of the things I think is what they're doing with their private label. And look, who wants private label? No one wants it because it's like weak brands, right? But at JC Penney, I'll tell you, people want private label. We did a survey of about 1,000 consumers, and overwhelmingly everybody said they will go back to the store if the company brings back private label. Why does it have to be brought back? Well, one is that Ron Johnson, in his infinite wisdom, he took away $2.5 billion worth of private label at a 48% gross margin, their most profitable product. Why he did that is completely beyond me. Substituted that with $800 million worth of product at about a 33% gross margin. That delta is about $1.2 billion in gross profit, or about 600 basis points in margin that JC Penney lost. It was ridiculous, but it's not structural. It can be brought back, it can be fixed, and people are not willing to accept that.
Right, so making a call on private label, kind of a contrarian call within a contrarian call here.
I think it is, yeah.
Interesting. Okay, so JC Penney's lost a lot of sales over the last year, 2 years. Where did all this go?
So it's about $4.1 billion in sales. A lot of sales. And I mean, look, this whole space is a zero-sum game, right? So it's not like it grows at 20%. It grows at about 1% in a good year. And I had thought, based on all my analysis, that Gap and Macy's had been winning that share. And then as part of our consumer survey, which we had done a couple of months ago, that we're going to update again around Black Friday, we found out that about 19% of consumers that had been going to JC Penney now go to Kohl's, which is about $800 million in sales over to Kohl's.
Okay, so wait a second. So if I look at Kohl's comp, it was only up, like 1 or 2%, correct?
And that's the big point of pushback. Brian, how could Kohl's ever gain that much share when they only had a 1% comp? And I'll tell you exactly how. If they didn't get that share, they would have comped down 5. And no one wants to accept that, but it's a reality.
Okay, so we actually have 2 calls here. We have long JC Penney going against the tide, and I'm sorry, long JC Penney, then short potentially Kohl's, which is a stock that I think everybody likes.
Exactly, and if I could add a quick stat there, you have Kohl's that has sales per square foot of $240. Actually, I'm sorry, about $220 a square foot, and JC Penney, which is at $100. And what you're going to see over the course of a 2 to 3 year time period, I know it's a long time, but those are going to go like this.
Got it.
Right.
Okay. Two strong calls here from Brian McGough. So thanks, Brian, for joining us, and thank you all for watching. If you have any questions, comments, or concerns, you can follow Brian on Twitter, and his handle is @Hedgeye Retail, or follow Hedgeye on Twitter. The firm's Twitter handle is @Hedgeye. Thanks again. I'm Todd Jordan.